August 14th edition of Back Roads of Illinois. We were Central Illinois agriculture source, and in the Midwest alongside in Central Illinois agriculture, we were glad you're here on Back Roads of Illinois. I apologize for yesterday's show without your agricultural news and markets update. Our guest yesterday because I had something come up with my family. However, I am glad to join with you guys on a Wednesday. Hump Day, yeah, it is almost Friday. Otherwise, this time is for serious business for your agricultural news and markets update on Back Roads of Illinois. World Agricultural Supply and Demand Estimate Report. Recession in the agricultural commodity markets. The congressman is pretty disappointed by John Deere in Illinois. The World Agricultural Supply came out yesterday. The corn was bullish from yesterday's report is 183. 2 bushel per acre. Soybean numbers were bearish from yesterday's World Agricultural Supply and Demand Estimate report is 51.2 bushel per acre. The yield is unchanged as well on the report from the Department of Agricultural. The agricultural economist is warned to the farmers and ranchers. Ag economy could be a recession in the agricultural commodity. Spike in the stock market is falling apart from last Monday in New York. The markets are trading lowest prices since 2014. The congressman is pretty disappointed by John Deere in Illinois. U.S. Rep. Eric Sorensen from the Quad Cities area. He is pretty disappointed by John Deere in Moline, Illinois. Reporter John Deere announced that they will be laying off by December 31st in the Midwest. We're coming back with Mike Castle from Stonex Financial for Fertilizer Division. We were talking about the fertilizer prices with the situation in the Middle East. Then we'll talk to Toni Dunker from Advanced Trading and John Heinberg from Total Farm Marketing. I will give them payback about the Packers because the Bears are looking good with Cabell Williams on pregame on Saturday game in Buffalo. Stay tuned on Back Roads of Illinois. Today, we were joining with Mike Castle from Stonex Financial for Fertilizer Division in Kansas City for this morning. How are you today, Mike?
Doing great, Caesar. Good to be back with you.
Let's start with our conversation about updating on the fertilizer prices with Middle East.
Yeah, so you mentioned the Middle East there. Obviously, good to always kind of remind everybody of the kind of scale of what actually comes out of that area. The Middle East not being the area we would typically think of when we're talking about the ag markets here, but over half of the entire world's urea exports come from the Middle East and North Africa. Kind of these geopolitical events, whatever tensions that we see in that region, they have a real impact on the price of fertilizer, especially on the nitrogen side of things. But honestly, across the board on NPK, there's a lot that comes out of these areas. For example, Israel is one of the world's top potash exporters. Saudi Arabia is one of the world's. If we did see a more direct conflict involving Iran, if we saw a similar situation impacting shipments out of their side of the Arabian Peninsula. So that Arab Gulf region is extremely critical for nitrogen supply. again, hopefully we don't see anything, too far in terms of escalations here. Hopefully we don't see an all-out war. Iran is still yet to retaliate with Israel, continuing to say they'll do so, but may be willing to push that back if they, kind of get somewhere on a ceasefire in Gaza. Still very uncertain, obviously very, very hard to predict. But Iran themselves too, not only are the shipments, in the waters near the country very important, Iran themselves are the world's number 3 urea exporter last year. They're very, very large. They're very sanctioned, but a lot of their stuff still gets out. It's kind of an open secret in the fertilizer world that they're able to just export and say it's from other countries. But if we saw that direct conflict come forward and saw more strict enforcement of those sanctions and actually lost that supply, that would certainly drive prices up because we lose that amount of supply, and not just overall supply, but a very, very cheap point of supply because the folks buying from them recognize yield years on record. USDA obviously is reflecting that here, which again, I think makes sense. The soybean side really was the most bearish for the US coming out of this report, and honestly, globally as well. But the biggest thing here on the soybean side, I think, not only did they increase yield up to 53.2, we actually gained another million acres, which was pretty unexpected. The corn side, we lost 800,000 planted acres. So, again, kind of switching out of corn, going more towards beans. And that did help offset some of the impact on the production side on corn. And honestly, from an ending stocks, just total carryout perspective, it wasn't really that bearish on the corn side. We actually tightened slightly because of some of the demand adjustments that we made here. Most notably on the corn side, exports went up both on old crop by 25 million bushels and new crop by 75 million bushels. So we're seeing a lot bigger demand, and there are, a handful of issues with the corn crop around the world that I do think could kind of, justify that. The opposite of that would be soybeans here. So we did see soybean exports get upped by 25 million bushels for next year. The current 2024-25 market.
Do you have any final thoughts, or re-edited?
Nope, I think we're good here. Just happy to see, some amount of green in the grain markets here today after the ugly start to the week. But that August WASDE kind of setting the tone here going forward. Again, the weather staying excellent here. I know you guys in Illinois, USDA pegged the statewide corn yield at an average of 225, which is just crazy. I think that's like 11 bushels an acre better. So hopefully we can at least have some big production to help, offset some of this impact. But obviously, a lot uglier prices than we're used to seeing here lately. So again, just, makes sense to pay more attention, to be more up to date on these markets. So we find good selling opportunities when we see them on the grain side and good buying opportunities when we see them on the input side.
Where people can find you.
I am not as much on the social media as, a Josh or Arlen, but, a lot of our info, go follow Arlen Suderman on Twitter or Josh Linville on Twitter. But we've got plenty of info. If anyone ever has interest in our information, please feel free to reach out to me. I'm just mike.castle@stonex.com. For whatever inquiries, please feel free to reach out. You can find me on LinkedIn, or just, feel free to give me a shout.
Thanks, Mike.
Thank you.
This is Mike Castle from Stonex Financial for Fertilizer Division in Kansas City for Back Roads of Illinois. Thanks to Mike Castle from Stonex for Fertilizer Division, and welcome back with us on Back Roads of Illinois with John Heinberg from Total Farm Marketing for your commodity analysis. How are you today?
I am doing well.
How is the Packers for this preseason in Green Bay? The Bears won by 33 points to the Bills on Saturday.
I have a sense this is going to become a running theme between me and you. Well, just to let you know, Packers beat the Browns quite convincingly. Jordan Love went 2 for 2 and a 60-yard touchdown pass in 3 plays. So he's ready. Good luck to you guys though this year. You've got a special talent, Mr. Williams. Hopefully he can bring the things you guys need.
Thanks. Let's start with our conversation about the green stock on Monday in the World Agricultural Supply and Demand Estimate Report.
Sure. Obviously, Monday we had the supply demand numbers come out. Really, for corn, wasn't anything good, wasn't bad. It was neutral, maybe a touch friendly in the bigger picture of things. First off, I mean, everybody looks at the shock numbers that come out there. We moved some acres around. There's a lot, 700,000 came out in terms of harvested acres. But then they bumped that yield up over the 183 level. And that's a monster yield. We got some states out there. They're looking at Illinois carrying a 225 average. Now we'll see how that materializes. That's a pretty lofty number. But again, you're looking at record yields in a lot of key states that are potentially out there. And now it's going to come down to finishing the crop out. Now, the best thing about it, I guess, in terms of what the numbers are, even with that jump in yield, production's down a little bit from last year. Carry out projections in terms of leftover corn supplies down a little bit from last month. So we'll have to see how this thing wants to trend out. Typically, a big crop can get bigger, has always been the mindset of the marketplace. And I do think a lot of it right now is just going to be what's happening with the old crop corn. Is it getting moved? Are they trying to find storage? I think that's just going to be a wet blanket over the market in the near term. Over into the soybeans, that's where the negative numbers came into play. 1 million extra acres added in, yield jumping up again on the potential of those strong crops. Again, looking at crop ratings, 67% good to excellent there on Monday afternoon. And now we've got a nice radar full of rain working across the Corn Belt today that's going to help finish that soybean crop out. So the prospects of that 560 million bushel carryover still look pretty good in terms of, the supply that's going to be there. I'm even a little concerned that the USDA is still a little bit friendly on the demand side of things, especially given the way demand has been acting so far for soybeans. And I think that carryout number come spring could easily move up over 600 million or higher if we don't start seeing some demand pick up. So that's at least a little bit of what's happening in the marketplace. Then you got a wheat market that got actually probably the most friendly report. We saw some ending stock numbers come down. The market was expecting those numbers to go higher, but wheat right now is in a tough spot because it really can't rally much.
Is there anything would you like to tell our listeners about the livestock markets, especially for today?
Livestock markets are pretty interesting right now. First, let's just touch base on the cattle market. We've had a nice price recovery off those lows the last week or so here. A little bit that's driven by, I would say, cash trade where we are. Cash trade is still trading well above the futures, but is trending lower. Early reports this week look to bring another dollar or two out of that cash market. So that could be a trend we'll have to watch. How does that impact the futures market? Watching retail values very closely. We're in that Labor Day buying demand window. Typically, that's kind of the end of summer, end of grilling season mentality. So if prices start to roll over a little bit after this next little stint here, that could come into play on the cattle market. I'm saying a little bit short-term defensive for guys that got cattle definitely coming through the pipeline over the next 6-8 weeks here. I want to make sure we got some protection in case this market wants to go back and retest those lows. So we'll see how things are going forward. I think a wild card in this cattle market is going to be the feeders. Feeders have had a nice recovery. Sounds like the cash market for feeders is still very, very strong from talking to producers. We're also in a window where producers are going to be, putting cattle back in the lot. That feeder market, which did hit a very long-term objective on some of the charts here with this pullback, can get some recovery. That's going to lift the live cattle price up. So I'm cautious. I'm optimistic. But right now I want to make sure we got floors under the cattle market. And let your cattle be open to the upside if prices do want to continue to go. Going into hogs, kind of an interesting window here too with today's close. Big move in the October hogs. August contracts off the books today. Typically we see good strength in October hogs, but we're sitting right on a top side trend line today with that close. we can take that out. There might be $4 or $5 to the upside sitting in that hog contracts here, as that October's got a pretty big discount to that August price that came out, just today. So about $15 is what we're looking at there. So I think we can see that August hog contract, if it can follow through from today's close, I think there's a potential technical breakout that could put $4 or $5 up here to the upside. And I think that can lift the front end of the hog market.
How is the cash market in upper Midwest?
As I stated a little bit ago there, it looks like we're trending softer again this week. I saw some bids around the 188 window again for northern cattle. We haven't seen a finalized trade yet. We probably won't get that till end of the day tomorrow or during the day tomorrow. But at least those initial bids are down another buck or two from last week. That might be enough to keep the lid on the cattle market here if the cash market continues its downward trend. We were just talking upper 90s here a couple of weeks ago, and now we've lost about $8 to $10 off that cash market.
Do you have any final thoughts?
Going back to that grain market, prices are tough. Just make sure you stay active. Make sure you're talking about all your options that are out there. Feel free to reach out to somebody like myself to go through some of those options. Sometimes a different voice is a great way to look at things. What's going to be happening with this corn going forward. I'm a little concerned that we could have a pretty big, for lack of a better word, quagmire of new corn coming in, old corn moving around. If there's some basis numbers that you need to set, look at it early. Don't instead of late, because of the pile of corn that could be coming at us. Early harvest is not that far away from some of those southern states. From what I've heard from some producers in those areas, pretty good sized corn crop coming in. That's only going to add to the pressure. So I'm staying a little bit defensive for a fall low, and then I'll talk about some other ideas. But at least right now, be active in what you're thinking about doing, and make sure you're having conversations with people that can help you out.
Where people can find you.
You can shoot me an email, jonh@totalfarmmarketing.com. Our website is totalfarmmarketing.com, or feel free to call the office. Love to chat with anybody anytime. 800-334-9779. Just ask for me.
Thanks, John. This is John Heinberg from Total Farm Marketing. For today's program, we were bringing Toni Dunker from Advanced Trading One-Back Roads of Illinois. We were back with Toni Dunker from Advanced Trading in Quincy Branch. Welcome to the show. How are you, Toni? We're glad you're here on the show.
All good on this end. It feels like we're growing a great crop over here. We're working on fall planning right now, trying to help producers figure out what they're going to do with the bushels that they're going to get ready to start harvesting in probably a month.
Let's start with our conversation about updating on the crop conditions in West Central Illinois near Macomb.
Yeah, so across the area in Western Illinois, crops look very, very good. It feels like we have some great potential. We just need to get these crops across the finish line. As I drive past bean fields, I don't think I have ever seen bean fields in general look as good and as full as they do right now. We're having perfect finish weather for the beans. We just need to get everything across the finish line without any big wind events. And I would say likewise for across the river, in the Missouri counties that are surrounding us as well.
How is the weather conditions in West Central Illinois?
So we've been having very good conditions considering this the middle part of August and we're expecting rain. But for me to look out the window right now and see grass as green as it is, it's pretty unusual. And I think we can attribute this crop that's growing right now to the weather conditions that we had in July and the beginning part of August so far. I mean, good timely rains, good temperatures while most of the crop was pollinating. So, I feel very comfortable in saying this is one of the better weather years that we have had to get this crop in the bin. Now, here's my question, what will the first frost be? And will we get these crops across the finish line before that first frost comes? That's kind of something that we're giving some thought to, given how cool it has been.
What is your thoughts about the World Agricultural Supply and Demand Estimate report on
quarter and first quarter hogs in the past 10 days? And if hog producers have not already done so, they probably want to go ahead and get coverage against any remaining hogs that they have not hedged yet in those time frames. The other thing that hog producers probably need to be looking at are what their clock bid or their calendar year bid is on soybean meal. We need to start paying attention to that with bean meal making contract lows in the overnight. Hopefully their basis levels will widen out some more and that we can lock up a good soybean meal bid cash wise. And they also probably need to look at starting to protect some corn as far as production goes, for their hogs. That input needs to be locked up as they go along and give themselves a floor under hog prices.
how is the pork chops and ham markets?
Yeah, so cutout has hung in there. It's just been kind of trading sideways. Ham has actually been a good driver to the pork cutout the past few weeks. It's been very supportive, and that's probably because Mexico has been in the market buying hams. Bellies, backed off a little bit, but then have popped back up just a little bit, maybe counter seasonally. I mean, we started lower and then I think yesterday and today we saw some better pork belly values. That's all been supportive to the cutout, which I think has helped that hog futures price move back higher and giving us some levels that probably are worth at least getting a floor put under to cover up that remaining, percentage that maybe the producer doesn't have hedged yet for fourth quarter and first quarter.
Do you have any final thoughts?
So what we're talking with our customers about right now, make sure that they sit down, figure out bushels that they are not going to be able to store. They need to figure out what their cash flow needs will be, probably get some basis set on bushels that will be, not be able to be stored at home, and be prepared for the big crop that's coming. And then, make sure that they do leave some upside open. I mean, I don't want people so bearish and thinking that markets can't rally. There are reasons why markets will rally, and it may not have anything to do with fundamentals. The funds are carrying a very large short position for this time of the year. At some point, they will take profit and get out of those short positions, which will push the markets higher. So have a plan, be ready for fall, and don't get too lopsided one direction or the other, thinking that the market is going to move one way or lower or higher.
Thanks, Toni. We enjoyed our conversation for this afternoon.
Thank you very much. We'll see you soon.
This is your commodity markets with Toni Dunker from Advanced Trading in Quincy branch. This is your commodity markets update minute on back roads of Illinois. Corn futures finished in up 8 to 10 cents. Soybean futures finished in up 3 to 4 cents. Wheat futures finished in up 7 to 9 cents. Cattle finished in up 3 to 5 cents. Feeder cattle finished in up 7 to 4 cents. Lean hogs finished in down 3 to 6 cents. Crude oil finished in up 10 to 9 cents per barrel. Dow Jones finished in up 8 points. Thanks to Mike Castle from Stonex Financial and Toni Dunker from Advanced Trading, John Heinberg from Total Farm Marketing. We're running out of time on our show, but you can listen to our show wherever you get your podcast. This been Back Roads of Illinois. I am Cesar Delgado. Have a good day.